I'm going to tell you, the folks that took shortcuts, where they're going to see the fair value gap, the shift in market structure, they're going to try to go short. And I'm telling you in the chart, that's not it. Because you didn't watch the entire thing. You didn't back test. You didn't read price. You didn't study. You didn't do any of those things. And you're trying to sell short today. Over and over and over again, wrestling, arm wrestling, because you have something to prove. Well, you're proving that you're not as disciplined as you claim to be. You're not profitable. You're not consistent. You're not precise. And your method's shit. Yin and yang ain't doing shit for you. So if you're going to wrestle with these markets, you don't invite yourself to be wrestling emotionally and psychologically while you're in the trades. So if you feel that tug of war that's affecting your focus, if you're physically talking about it, if you do those types of things, if you make any kind of physical, audible response to whatever the market's doing, that's the surest sign that you need to take something off. You have to do that. If you don't do that, you're literally putting yourself through the ringer for no reason. Because you don't know if your target's going to get hit, just like mine wasn't hit today. I had 2 partials that came off, and I had the largest portion of the trade in the book. My stops were rolled. If it came back, I told you I didn't care. $9,100, but wrong. Say that again. $9,100, and I was wrong. How many times can you afford to be wrong if you don't pay yourself? You're literally in the statistics that this industry talks about, shitting yourself in the first 90 days, which is why I did today, day 1, 90 days. You'll see every fucking trade, everything, full history, everything, but you will not see that from the people crying about it. They want me to do it. I have no problem doing this, folks. If that's what you need to feel good about this, sure, it's no problem. I do it every day anyway. Like, I'm going to fucking forget how to trade because I got to show you the history. Listen. We're dumb. We're done with all this dumb shit. Okay. I'm killing everything this year. I'm removing any doubts. All you have to do is keep showing up. I'm bringing everything. You can't be profitable. You can't make a lot of money with 5 handles. Watch me. Watch my students. You don't need to know where the high is going to go. You don't need to know where it's going to close. You don't need to capture the full AM session move. You don't need to capture the full PM session move. You don't have to be right on your direction. You can be wrong, get in alignment and say, okay, I was wrong there, and you reverse it and do half the position size that I just took a loss on. And end up making more money than you probably would have done if it would have moved in your favor. This is what I'm talking about when many of you are getting into this industry and you don't really know what you're doing and you don't know what to expect. And you listen to these yahoos on the internet. They have no idea what they're doing. These people that can't prove that they can trade profitably, they're the one giving you advice. They're the ones telling you what you're seeing didn't happen. That's lunacy. Like, that is lunacy. Like, that is some Tom Cruise jumping on the couch shit right there. Okay? Like, these are the people you're going to listen to. Just look at this week, folks. I didn't get lucky this week. We're going to do a whole year of this. You need to think about who you're giving your time and attention to. You need to guard it. You are going to be met with so many things distracting you this year. Social media, trolls, your personal life. Watch how it happens. It always works like this. It always does. Because it's like this unseen force that doesn't want to see anybody be successful. And all you got to do is keep your nose down in the charts, keep your ears open, and listen to what I'm telling you to do. And don't do the things I tell you not to do. You need to use a stop loss. I could have kept this trade from being seen by any of you today. But if I'm going to teach you, how to do proper trade management, proper risk management, and emotional and psychological management in a trade, this was a perfect hallmark moment for it, because I wanted to see it run up there. I literally was telling myself vocally, I said, it needs to go here. And as soon as I did that, that was it. That was my cue. So I do exactly what I'm telling you to do. If I'm going to make a physical response audibly or with my body, I'm disturbed. I'm trying to get more comfortable because this is making me uncomfortable. It's not doing what I want it to do. It's not bending to my will. So now I'm becoming what? I'm arm wrestling it. So if I start arm wrestling the market and I have something on the trade where I can peel something off, 5 contracts, 2 contracts. What if you only have 2 contracts? Would you still take one off? Yes. Yes. What's wrong with that? What is wrong with that? Because what you're saying is you fucking know without a doubt that your target's going to get hit. When I'm saying everything in that chart when I was recording it today, once I got my second partial and it pulled off of that 39.40 level, I was like, okay, it needs to stay above that fair value gap that was formed just after 10 o'clock. And I said, it must remain open. It traded all the way down into that after running up to 39.33 and 3/4. So that dropped down. I need to see an immediate response to get to 39.40. I got it in the first fair value gap that you'll see in the recording. It's like a pink color. Then it retraced back down again after running 39.40. But I was already committed to my stop. Now I could have opened that stop up, and guess what that does? That makes me a hypocrite. That means I don't practice what I teach. When I practice what I teach. Market went up to 39.80 something, whatever it was today. I don't know exactly. It had a really nice run. But my focus was only aiming for 39.45. I just want to take a second real quick. Thank you, folks, that were helping me today on Twitter, because I did a test run on the live sessions. I want to make sure that my layout that I created this morning was okay looking. It's not bling bling, right? It's never been me, but it's functioning. It's fine. I got a disclaimer, I got the welcome page, and then I had all my charts set up. So the audio, I have a microphone that wasn't connected, but I was just using the laptop microphone. So thank you for helping me, work that out on Twitter and confirming some things. But if you go to look at that recording, you'll see only one liquidity pool highlighted. It says buy side liquidity, 39.45. Oh, you cherry picked it again. Yes. I'm good at picking cherries, I know. So while that was my only objective for today, because we had to do our grocery shopping in the afternoon, and that's where I spent most of this afternoon. And yes, I was looking at my phone, and yes, I was thinking I could do this, but I can't do it because I can't manage it appropriately. So I had to stay out, and here's where I'm at. So the question is, do you have it in you to admit when you're wrong? Can you admit when you're wrong? Because you need that skill set in this industry. A lot of the hotheads, and I might sound like a hothead, I'm just passionate. But the hotheads that will tell you, don't do this, don't listen to me, don't listen to anybody but them because they're selling bullshit. They have a service. They have something to sell you. I'm not doing any of that. I'm over here outperforming them, over delivering. I'm busier than them, proving it, showing you. Got profitable students coming out of my ass, and they got something to say about why you shouldn't be here. And the response would be, buy their stuff. as an alternative. I'm just reminding you, I'm doing this because I want to do this. It's free. It works. People are making money. You can find consistency in it. You will lose money like anything else, but you need to understand how to manage even winning positions. Winning trades, they have to be managed just as much as a trade that might be a losing trade, but you hold on to them too long. Now, think about this for a moment. If you've traded with live money, this is not the same as when you're trading with a demo or paper trading, you're trying to learn how to do it. If you ever traded with live funds, you're going to have this experience. Once you do it, at least a few times, you'll have this happen to you. You'll put a trade on. You'll feel good about it, or maybe you won't feel good about it. You'll just be impulsive and put the trade on because you have time and you just want to see something happen and feel like the lottery win. But you'll put the trade on and it won't move in your favor right away. And it starts drifting down. And you know in your mind's eye that if it goes to this level, you don't want to be in that trade. But your stop loss, if you've adopted one, is maybe very close to that level that's really uncomfortable for you if it gets to that point. So in reality, that should have been your stop loss where you're uncomfortable, because you don't know if the market's going to drop down there and snap into that level and go through it. So wherever that pain threshold is for you in the trade, that's where your stop loss is. But how do you manage that? Fear. Don't over leverage, but use that same stop. Because what you're doing is you're saying, I'm fundamentally wrong as a human being, because if it goes here, it's probably going to keep going. And my idea about it going higher is incorrect. And that's uncomfortable. That's worse than a stop out, because it's pride. Pride takes more than a losing trade takes in funds. It lasts longer. The pain's worse. The drawdown doesn't come back that fast from a losing series of trades because of the ego. The pride is the issue of being right, to be perceived by your peers or onlookers, detractors, supporters, whatever you want to call it, an audience, whoever you invite to watch your trade, to make it harder than it fucking has to be. It's stupid. It's madness to see what you guys want to do with yourselves. And then when you are struggling, trying to find profitability, you're coming at me to vent when you're doing it all wrong. You're out there trying to arm wrestle yourself in front of the public and you're floundering. I don't need to do anything. You're doing it to yourselves. But if you're here to be a student and you want to learn how to do it correctly, you have to identify where you're wrong and admit that, okay, I'm wrong here. That's wisdom. That's wisdom. But you look at it as, that's a weakness. I should have known better. Who says? Who says that you should have known better? You don't know what that market's going to do. You don't know if it's going to run to your target. I don't know. That's why I have to use a stop loss. If I knew for certain, I wouldn't even bother moving my stop loss. I wouldn't use a stop loss, and I wouldn't take my partials, would I? Oh, shit. I never really thought about that. Hello. In high resistance liquidity run signatures, I am very, very, very disciplined about taking partials. If I'm in a low resistance liquidity run signature, I can run them for a full pool. I have a lot of things that I feel confident, and I'll let the full stop out happen in that case and not have to worry about getting any partial. I know I'm on side. That doesn't mean I know with 100% assurity that I'm correct. It just means that I, as the trade manager, managing the person, the risk, the emotions, the money, all those factors being equal, I'm comfortable with not taking partials in a move that's low resistance liquidity. It means it's going to move like a hot knife through butter. Nothing's going to really slow it down. Look at the annotations today. In today's video, I'm annotating saying, okay, you think you see the 2022 model and it's a sell here. It's not. Retail sees resistance here. It's not, but it's slowing price down. And I said, it's a speed bump here on that first fair value gap. What are those adjectives communicating? Resistance. High resistance, but not formidable enough to stop the price from going where? 39.45 and 39.85 or wherever the high was. But it's a lot more aggravating when you're used to seeing moves just run right away for you. See, I'm used to trading in market environments that, like when I dog whistle for my boxers and I call them, they immediately come to my side. When I dog whistle a trade that's a low resistance liquidity run signature, I'm comfortable knowing that the market's going to go where I want it to go. I still have a stop loss. I'm not all that pressed to take partials or that much of them off because I'm generally on the right side. But high resistance liquidity run signatures, you have to be mindful that they can many times come back and swipe stop losses much more frequently than a low resistance liquidity run signature. Those price runs, they don't have a whole lot of returns back for stops. They're quickly trying to run to an objective above or below the marketplace, which is the reason why I teach my students to look for those. They're very rewarding. They are quick to give you that instant gratification, and it's exhilarating. You feel like, wow, man, that thing delivered like nobody's business. Man, how fast that thing happened. That felt awesome. And you want to go right back in and do it again when you're new. You think it's going to be something just like that next. And it's not like that. There's small little surgical precision elements that leads to that. But high resistance liquidity runs, they will still go, but they go in these stair-stepping type thing. It'll go up a little bit, consolidate, drop down, reaccumulate, go up a little bit slowly, go to a new high, consolidate, drop down, run stops. Consolidate, rally up again, consolidate, drop down to an inefficiency, rally again a little bit, and then go down once more to take out stops after the inefficiency formed. That's what makes a high resistance liquidity run very frustrating. And many of you that are trying to learn my concept, you're going to think that you're trading like I am. And you might think that you're in one of those trades that move real quick and it's like hot knife through butter. But in reality, you're trading a high resistance liquidity run, expecting low resistance in that move. And you're getting frustrated. Why? Because you don't know what you're doing. 2, you're over leveraged. 3, you don't have experience sitting in a trade. And you're not going to take anything off because you listen to people on social media say, don't take partials, they're stupid. When I'm showing you every day, every week, months and years, over and over and over again, me executing with the very things that I teach. Come on now. Come on. What matters more? If you're in a court, okay, if you're sitting in front of a judge and a jury, who's going to have the more damning evidence? Somebody that's bringing the receipts showing that this is what it works like. This is execution. This is the person driving, and I'm doing it. I'm doing it every fucking day. Every week, I'm showing you exactly what I taught in those videos, and it's happening like precision. But it's also delivering the same way when I say it's a high resistance liquidity run. It's performing exactly how I said this is what you don't want to be pushing hard in these types of moves. Can you make money? Yes. Can you find 5 handles in those types of moves? Yes. But you have to relax. You have to relax. And you can't push. And you sure as hell need to know the bias. You can't be selling short on a day like this over and over and over again, and adding more and trying to do a bigger position because you're arm wrestling for clout and failing. Allen, Texas, like I said you would. Why don't you just listen to me? I'm giving you the very things to help you, and you are fighting me. You're fighting me.